Good morning, welcome to IG's early morning call. We've made it through to the end of another week, and what an interesting week it's been. It's Friday, 19th of May. Let's take a look at the headlines as we see these equity markets continue to gain. And we've seen some good economic data coming through from Japan this week, and it's culminated in what is a 42-year high for one of the inflation readings in Japan. Pressure now mounts on the Bank of Japan to turn hawkish. Following what's happening on the foreign exchange markets, taking a look at the dollar, 2-month highs, we're pushing euro dollar down to levels that are interesting in terms of Fibonacci support lines. We'll take a look at that. All this comes as the US debt ceiling negotiations expected to culminate in some sort of a deal, possibly earlier rather than later. And we've got agricultural prices on the way down. Black Sea deal has been extended, and this has seen a drop in wheat, corn and soybean. Take a look at volatility to begin with, because this really these big we've seen this week. In fact, yesterday culminating in a close that we've not seen in 2021 since we've seen lows like volatility. News. But for investors, it is good news, because what it does is it means that we end up with these markets being supported. London is not a particularly good example. We normally start with a look at what's happening in London. 24-hour markets, we've got third day in a row of gains, and we're certainly expecting a slightly higher start to the beginning of today's trade. But let me wind on to a market which has and continues to show new higher highs. Now, this is the German DAX, and we are just a handful of points now away from an all-time record high at 16,298. This red dotted line here were the highs that we had. I think there was two hits in this back in January 2022 and earlier than that, November 2021. So we are literally, what's it, about 50, 60 points, 70 points away from an all-time record high on the German DAX. When you talk about 16,200, that 70 points represents a tiny percentage move up that's needed from where we are to score a new record high. Big gains in yesterday's session, and we've got this market now just pulling back a tiny touch to 24-hour markets, but we are looking for a stronger start at the beginning of today's session on the German trading day today. Same sort of thing for France. A little bit of a pullback after yesterday's second day in a row of gains, taking us up there to levels not seen since the 1st of May. Doesn't stop there either. Overnight in Japan, we've seen another rise. We've been talking a lot about this week for the Japanese markets. Gains as well in the Australian benchmark. Hang Seng Stock Index has seen a bit of a rocky week. Let's take a look at this Nikkei 225. 33-year highs for the Nikkei as of yesterday's 24-hour close. These are the daily moves. Let me take a look at what's happening with 1 week, because you can see it's absolutely incredible. This week has been an absolutely stunning week. In fact, it's been the strongest weekly move up we've seen since the 14th of March this year. But as I say, significantly, it's broken through the line of resistance that we'd had to take us through there to levels then not seen since 1990. So 33-year highs. Where we are now on the Nikkei 225. We reported earlier this week the Topics Index, the broader market in Japan, had already reached that 33-year high. So Nikkei, in some respects, in the wake of that, with that move. Where do we go from here? Well, the economic data is proving good. We saw some good data out this week on GDP, and we've got that number coming through on CPI. I'll take a look into some more detail about the Consumer Price Index in just a minute, but broadly speaking, it's showing an economy which is beginning to show some resilience. And after 3 decades, we're finally getting some firm upside traction on this inflation number. Let's take a look at the Wall Street close. As of last night, we saw gains across the board. Techs, once again, the best performers. And I just want to show a couple of charts here. This is the NASDAQ, that 1.5% rise there, represented by that green candle there, and indeed we're consolidating at the top. Significantly, this market is now at levels there not seen since April 2022. So that is, 13-month highs. And indeed, this market, we're now at 30% from the lows that we had back in the 6th of January. I've taken it from there because that was pretty much the beginning of the year. Let's take it back to there since the very back end of December. But a 30% rise in that market really has been, percentage-wise at least, a stunning return to some sort of performance after some big declines across the NASDAQ and seen it down 37% from those record highs we had back on the 18th of November. Now, that record high is at 16,700. 13,800 is where we are. So we've still got a fair bit of movement to make before we get up to those levels. But nonetheless, fourth straight week of gains, now at 13-month highs. Doesn't stop there either, because we are witnessing gains on the Dow, but not so strong. But also the S&P 500. And look, we've got a break here of that line of resistance as well, taking us there to levels they're not seen since August 2022. So that's the back end, the middle of last summer, where we saw that market last at these levels. So the S&P 500 also enjoying lift. I think the bottom line is here, it's tech stocks that's making much of the upside. So that's where we are in terms of some of the moves on the equity markets at the moment, pushing yields down, volatility down in the market. Now, UK consumer confidence has improved for a fourth straight month, with data out today from GfK. The survey showing consumer confidence rising to a 15-month high, a negative 27 in May from a negative 30 in April. Last September, the index hit a record low of a negative 49. And that was when Liz Truss and Kwasi Kwarteng threw the financial markets into turmoil with the mini budget. The economic context remains, but very difficult for household. Inflation remains at 10.1% in the month of March. Remember the last data we had out on CPI, with the cost of food and drinks rising by the widest margin in 46 years. And that's painful for us consumers. But so far, recession has been avoided in the UK, and consumers' view of the economy over the next 12 months has improved to a negative 30 from a negative 34 in April. As for their view on personal finances, it improved by a margin of 5 points to a negative 8. Now, we've been reporting recently about this rise in sterling against the US dollar. We've seen a little bit of a move down recently, and as of the low point yesterday, we were at levels not seen since the middle of April. But it is only a small retracement in what has otherwise been a very strong move up, especially from these, let's call them the Kwasi Kwarteng lows that we had down at 103.28 for sterling against the US dollar. So sterling holding on to much of the gains, despite the fact that it has been a negative week for sterling so far this week. Now let's go to Japan, where inflation keeps on rising. A headline CPI unexpectedly rose 3.5% in April, year on year, after 3.2% reading in March. Economists anticipated the index to cool to a 2.5% rise. The core consumer price index, now this excludes fresh food, but includes energy in Japan, rose 3.4% in April, year over year, picking up from a rate of 3.1% in March. And what the Japanese call core CPI, that's excluding food and energy, rising to 4.1%. Now this marked the fastest rate of annual increase in Japanese inflation at that point since September 1981. Now this is the barometer favoured by the Bank of Japan. When the bank talks of its 2% target, it refers to the index stripped from food and energy prices, the core CPI. For economists, the Bank of Japan has little choice but to revise up its inflation forecast in July, which keeps alive expectations of a tweak to the bank's massive stimulus this year. Checking in on what's happening on the foreign exchange markets, we've seen a negative week, broadly speaking, for the Japanese yen this week. That being said, today, you can see on this chart here that we've got a little bit of a pullback for the Japanese yen today. Very close, this line of support I've drawn here at 137.92. That had been resistance from the highs we had back on the 8th of March. But it is, broadly speaking, this break here is negative for the Japanese yen. So in the longer term picture, possibly, maybe we may well end up seeing some more strength of the US dollar. US dollar has seen some big moves up on hopes for the debt ceiling issues. Just while I'm referring to what's happening in Japan, just wanted to touch again on this line here, a 33-year high for the Nikkei 225. Pulling back a little bit from that today, but broadly speaking, the Nikkei appreciating the moves, positive moves in the Japanese economy. Now, let's take a look at what's happening with the US dollar, because we've seen a 6-month high against the Japanese yen. We've seen highs as well against other currencies for the US dollar, and it's up against a whole basket of currencies. For that, I want to show you what's going on with the dollar basket. You can see here that we're up at levels not seen since the 20th of March. Optimism over the debt ceiling talks in Washington, raising expectations of higher for longer interest rates. President Joe Biden and the top US congressional Republican Kevin McCarthy are determined to strike a deal soon to raise the government's $31.4 trillion debt ceiling. There are hopes for a deal will be finalised when Biden returns from the G7 meeting in Japan this weekend. Also, not in favour of a pause of the interest rate tightening cycle. Two Fed policymakers also said on Thursday that US inflation does not look like it's cooling fast enough. Now, let's move on from this chart onto the euro dollar chart, because I think this is interesting. We've been talking about this week on the early morning call. This Fibonacci here, the line of support at 107.39. Now, that was originally my sort of level at which I was going to turn positive on euro dollar. But we'll have to see how things strike out for the US dollar in the next few days or so. But one of the effects of a stronger US dollar has been a pullback in precious metals. And it's worth looking at what's happening with the price of gold, because it's been a very negative week for gold, disappearing below 2,000, currently trading at 1966. This fib down here gives us a support at 1910. That is my price target on this short trade for gold. If you have been short this week, which is what we've been talking about, keep on bringing your stop loss in to continue to lock in profits. Now, let's move on to other areas of the market. German producer prices unexpectedly rose in April, up 0.3%. Market anticipated a 0.5% decline. Not much to be taken necessarily out of that. I think really the foreign exchange markets for the German markets, for the euro, and also for the German DAX, I think really been twisted by expectations of some sort of deal for the debt ceiling. So it hasn't really had an effect on the market. I think it's just worth looking at that particular one line there for what's going on in the German economy. Let me just bring up another chart. I want to move on to what's happening with the equity markets. This is a chart for Smith Group. I think it's worth looking at this. Smith Group has just come through with some news headlines. The Industrial Technology Group lifting its annual revenue growth forecast for the third time in 5 months. This is just breaking news headlines. This was the move up we saw in the market yesterday. May well have been that some of this hint had been already in the markets yesterday, but I think it could well be nonetheless another positive day, possibly for Smith Industries. 1710, which is where we closed out yesterday's session. Smith said it now expects organic revenue to rise around about 10% in the 12 months ended July, higher than its previous guidance of at least 8% growth, which it gave back in March. So a positive stock story, I think, for Smith Industries. I think I'm right in saying that this high at 1807 were the highs we saw back in 2018. It was at 1807. So if you are long on this, that would be your price target. It may take a while to get there, but if we see any more news coming through from Smith that's positive, that will obviously give a further kick up in the stock. But at the moment, at least, it's been a positive week so far for Smiths. Let's go on and take a look at some other areas of the markets, and just want to remind ourselves of what's been happening with the oil markets. I'll take a look at the chart in just a minute. Just to remind ourselves what happened this time last week. Baker Hughes rig count falling by 17 to 731. This is mainly due to a drop in working gas rigs. The number of oil rigs in operation fell by only 2 to 586. But I think so far as the crude oil markets are concerned, it's been a flat line this week. I think it will go down, looking so it could well go down as a positive week, but it's only minor positive, 72.66. So that is a market where I find it very difficult to get any firm direction with the price of oil. Now, wheat and agricultural prices look poised for another week of declines as the deal that allows Ukraine to export grains through the Black Sea has been extended for 2 months. That was back on Wednesday this week. 3 new ships are also authorised to take part in the deal yesterday. I want to take a look at what's happening with Chicago wheat, which I think really says it all. We got this drop that we've seen over the last couple of weeks. We're not quite as low as we were on the 3rd of May, but you get the drift of what's happening with these wheat prices. Russia had been threatening to quit the Black Sea Agreement if a list of its own demands was not met. Now, these demands were related to its own grain and fertilizer exports. According to the Kremlin, results from talks had given it certain hopes, but more progress needs to be made. Staying on the chart, just wanted to show you what's happening with other areas of the agricultural commodities, I beg your pardon. This week, we've seen a drop for corn below the level of support we've been looking at 562, currently trading 532. And as of yesterday's low point, we were trading at levels not seen since the 15th 14th, 15th of October 2021. This drop is partly on expectations of a large global crop to come, but also on falling demand. The latest US Department of Agriculture weekly report showed net sales reductions of US old crop corn due to cancellations from Chinese buyers. Yesterday, the International Grains Council raised its forecast for 2023-2024 global corn crop by 9 million tonnes, reflecting improved outlook for production in Brazil and China. So the economic dynamics would potentially indicate further downside possibly to come for the price of corn. That's not a trade recommendation, but it's just something I think we ought to be looking out for as well. Staying on the chart, soybeans in amongst the mix as well. In this week's trade, we've disappeared below that line of support at 1290.2. And we are trading at the moment on Friday at 1279. Suppliers rising in the US, setting soybean prices for its biggest weekly drop in 8 months. According to the Department of Agriculture in the States, weather conditions in the US Midwest remain generally favorable, and planting is advancing faster than normal. So pressure building for agricultural commodities around the world. That's it for us for today. Back at 10:30 with Charting the Markets. So do join us there. Watch out for Smith's Group at the start of today's trade, looking like a positive, possibly positive start, but certainly a positive start to the equity markets across the European session today, and possibly the US later on hopes that a deal is in the air for the US debt ceiling crisis that has been developing this week. It could all come to a head when President Biden gets back from his G7 meeting this weekend in Asia.